Let's get across the market open. Mark Gardner joining us from MPC Markets. Mark, welcome, of course. Well, it's a very shortened week, isn't it? Given Christmas is only 2 days away.
Yes.
Before we get to the week ahead, let's look back on Friday. Of course, the focus was on US inflation with the PCE read, which was slightly cooler than expected.
Yes, it was slightly cooler than expected. We also had triple witching on Friday night as well, which is when obviously futures and stock options from the quarterly and monthly point of view expire as well. So sometimes you can get some fairly wild price action. I think the market recovered nearly 2% from where futures were pointing in the European session. So there could be a little bit of that taken back over the course of tonight, potentially, as obviously the options players are probably protecting their positions at these highs.
Also, I guess, well, this is after the market closed over the weekend. US government actually, the Congress resolve the debt ceiling issue. This happens every year, doesn't it?
It is a bit of a circus, but yeah. I mean, US politics is increasingly just a bit of a circus. So, I guess it was the Democrats' last chance to, have some small amount of leverage. But I guess, the self-centered nature of politicians, they wanted to get home before Christmas more than they wanted to make a point, I guess. So it's been resolved for now. It is a little bit concerning that Donald Trump wants to abolish the debt ceiling. I don't think it's not remotely in line with what, his new Department of Government Efficiency, Elon, and what the country needs necessarily, basically they need to get that debt under control. Rather than be abolishing any limitations to the upside for that debt ceiling. So that is of a big concern for me coming into next year. But and we'll wait and see what happens there. But it is possibly it's practical in terms of not having this debate all the time. I don't know why they would need to abolish it when they've got all three branches of government now, the Republicans after January the 20th. So, and now this one's been taken out of the way. So they'll be able to just extend it as much as they need to. So I don't think that's the greatest move in the world. But we'll wait and see what happens after January the 20th.
Well, presumably Donald Trump is being advised by Elon Musk at the moment, isn't it? Given he's the chief cost cutter.
Well, yeah, I mean,
he was apparently the phone was running hot over the weekend.
Yeah, look, I mean, all I can see happening here, if they're looking at him, is government jobs are going to get cut pretty badly, and that's where the government really has been pushing, or not falsifying, but fudging the numbers, I guess, with employment and how the economy's going. So either way, it's probably not that great having a bit of spike in unemployment at some stage, because unless he's got a miracle cure, which may be the tariffs, but, to help balance up that budget, but that's going to be short-term inflationary. So I can't see at the moment where they're going to do all the things that they said they're going to do.
Mark, let's look ahead to this week. Locally, of course, we had a couple of days of heavy selling last week, looking for a positive start this morning, although you wonder whether those transactions are going to get across the line, because the ASX having technical difficulties again. Yes,
technical difficulties again. I don't know how that is possible with a system as old as what they have, but they have said that obviously these trades will get settled. They've made a release in conjunction with ASIC, etc. as well, so that they will get settled. The market, they were looking at a half day potentially today, but they said that it'll be business as usual. But I'd be a little bit wary, just in case, in my experience, particularly on the futures side, one problem did usually lead into a couple more problems.
It tends to be cascading, doesn't it?
It does tend to be cascading. Anyone who's run an IT department will probably tell you that a bug can cascade quite a bit. But look, price action today will be really important. If the market can recover and head a little bit higher, we might be fairly safe for that thin period between Christmas and New Year. Otherwise, if we get a fair bit of heavy selling into this open today, I would be a little bit concerned about about the price action leading into those 2 to 3 days we have between Christmas and New Year, leading into the New Year.
So, of course, we're at that time of year, Mark, where you consider your portfolio, how well it's performed over the past calendar year, and then look ahead to some positioning. How would you assess where we're at right now?
Look, statistically, we've just had the best 2 years in the US market in nearly 40 odd years. So excluding the 90s, basically it's the best 2 year period forever. I think you've got to go back to 1929, etc. So statistically speaking, we're probably not going to have another gangbuster year. So what you don't want to do is give back your profits from 2024. If you've been on those, compounders, the WiseTechs, the Pro Medicus, even to the point of like Wesfarmers, JB Hi-Fi, etc. Valuations are quite lofty, and we do have a lot of risk coming into 2025. So more looking at the portfolio from the point of view of at least trimming some of those gains, banking some of those profits, and then maybe going and looking for a value elsewhere. Or I don't actually think, Warren Buffett's sitting in his highest ever position in cash for the Berkshire Hathaway fund. I don't think there's a lot of harm in sitting in cash and maybe seeing how things wash up.
All right, so take profits in some of those stocks you've just mentioned, but not sell out, but actually just take what you've seen particularly more recently, some of those
yeah,
profits.
Absolutely, and there is some value add there, particularly those resources stocks as well. The bank stocks have done extraordinarily well, and that's just that money flow from the index ETFs, etc. So look, it just momentum works in both directions, and we've seen really positive momentum in a lot of those much loved stocks this year. So what you don't want to do is give back your profits, and when and if that momentum turns to the downside. So you've got that period between Christmas and New Year, and probably a couple of weeks leading into the first half of January, where it's a really good time of the year to maybe reassess and look ahead to the new year.
So while everyone else is on holidays, now's your opportunity.
Work's pretty busy, kids are pretty busy. You probably will have a couple of hours here and there over the Christmas period to check in at least before 2025 ramps up again.